This is the Wide Format Impressions broadcast.
Welcome to the broadcast. I'm Dan Marks. The saying, "If I only knew then what I know now," taps into something universal. I personally have used this saying many times and will continue to do so. For this episode, we're going to look at data collected in fall 2024 and contrast it to the realities of May 2025. What has changed and what hasn't? What's important now? To help us dig into those questions and more, I'm honored to welcome Andy Paparozzi, Chief Economist with Printing United Alliance, who brings astounding knowledge of both the industry and the conditions that affect it. Andy, welcome to the broadcast. First, let's clarify. This discussion is based on the Print Business Outlook Series Wide Format Report for fall 2025, and a lot has happened since then, and we'll get to that. I should also add here that the survey was sponsored by Canon USA, which serves as sponsor for all of Printing United Alliance's Print Business Outlook and State of the Industry reports. The report says wide format producers were expecting sluggish sales, cost inflation, and resistance to price increases during 2025. At that time, what was driving those expectations?
Dan, the economy was already slowing. GDP grew at a 2.3% annual rate in the fourth quarter of 2024. Down from 3.1% and 3% the previous two quarters, and interest rates were rising. So that concerned participants in our wide format survey. They were also very concerned about what they were hearing about tariff proposals. They were thinking correctly, as it turns out, that the increases would further slow an economy that was already slowing and would spur inflation. And cost inflation was a major problem across wide format printing and printing industry in general in 2024. Labor costs, insurance, energy, transportation, and participants in our research concluded that raising tariffs would only make inflation worse. And with the economy slowing, they didn't see any reason for price competition to ease. So you had demand softening as the economy slows.
Sure.
You have prices elevated as tariffs work their way through the economy. And you have stiff price resistance to price increases. And that adds up to a broad profit squeeze. And that's what our panel was anticipating. And to date in 2025, that's exactly what's been happening.
Okay. Now, let's get into our time machine here, and we'll set the dial to May 2025. So here we are. We open the door, and there are two big elephants in the room. One is named tariffs. The other one is called economic uncertainty. So are these new developments stacking worry on top of existing worry? What are you hearing from PSPs out there?
Oh, absolutely. And the tariff issue is so critical that we recently conducted a special survey, our effects of tariffs on the printing industry survey. 292 companies from across our industry participated. And I'm going to share some data for the 53 whose primary business is wide format printing. An extraordinary 98.1% reported that they either have been affected or expect to be affected by the increase in tariffs. More than 3/4 expect the higher tariffs to increase operating costs by 11.2% on average over the next 6 months, which is a big deal in a highly competitive industry like ours. 64% expect the increases in tariffs to reduce their profit margins, and 23% expect that hit to margins to limit their capital investments this year. And equally telling, 43% expect the increase in tariffs to limit their sales growth in 2025, more than double the 13.2% who expect a boost from reduced foreign competition. Very compelling numbers that show how widespread, deep, and profound the effects of the tariff increases are across our industry. And concerning the uncertainty, many of the participants in our State of the Industry survey report that clients are already delaying projects because of this on again, off again. Today it's this, tomorrow it's going to be that tariff policy that no one knows what to do about. And I'm going to just quote one of the CEOs of a wide format company that participates in our state of the industry research, because he says it, he captures the consensus better than I can. I quote, "The uncertainty created by this on again, off again tariff policy is really delaying a lot of decisions and progress. The longer this uncertainty lasts, the more we will all struggle, no matter what our business." Again, spot on.
Now, I was last week at the International Sign Expo down in Las Vegas, and the energy there was pretty high. Do you think, even amidst the uncertainty, the potential for tariffs, that if a company needs to make a capital investment in order to expand, they should go ahead?
One of the things that we emphasize in our reports is that during periods of great uncertainty and market upheaval, like now, the tendency is to sit tight and wait for clarity. The opportunity, however, is to create clarity by stepping up communications with clients, with employees, with suppliers, and certainly by moving ahead with your long-range business plans, making those capital investments, making those investments in your workforce. What happens is every market disruption, whether economic, like a recession, or whether technological, like artificial intelligence, or political, like a reordering of the international trade system, every market disruption creates opportunity that someone captures to come out of that disruption stronger than they went in. And that's how you do it. To your point, Dan, about moving ahead with your plans, moving ahead with your capital investments, moving ahead with your investments in your workforce, that's how you come out stronger than you went in. That's how you prepare for the upturn, to participate fully in the upturn when it comes later this year, while competitors are either sitting tight or retrenching.
And I know we saw some of that quest for opportunity during the pandemic as well. There were some companies who very much stepped forward and found it to be their time to retool, to pivot, to reinvent themselves, to grab opportunity.
Precisely.
Yeah, going back to the survey report, I know the wide format PSPs in there said that their biggest concerns were challenges in increasing sales and keeping their businesses profitable. Again, I'm going to ask you, what do you think were the driving concerns? And then how do you see that current environment changing given new developments?
The concerns, and you're absolutely right, those were concerns number one and number two. Those concerns were based on an economy that was already weakening, interest rates that were rising significantly, and that matters. Persistent, broad-based cost inflation, insurance, utilities, labor, on, and stiffening resistance to price increases, all of which, again, participants in our state of the industry research correctly anticipated would be intensified by the kinds of increases in tariffs that they were hearing about. And again, I would quote one of our wide format CEOs, because he captures the mood, the feeling, the consensus more accurately and concisely than I could. Here's what he said. "The proposed changes to the current U.S. tariff policies have been very disruptive to our business operations. They have had a detrimental effect on pricing, and decisions seem to be predicated on whatever comes out on the 24-hour news cycle. Every time the president makes a statement, it gives suppliers a reason to raise prices on the consumables we need to produce our end graphics." And of course, he's absolutely right. How do you plan? How do you invest when there is this kind of extraordinary uncertainty? That's the reality. But the other part of the reality is, as we just discussed, the opportunity as I can't tell you how many times in presentations, in surveys, I hear people say, members of our industry, across our industry,
Sure.
big companies, small companies, say, I have to wait for some clarity. But as we've just discussed, and as you said, perfect reference to what happened during COVID, the ones who come out of this thing stronger than they went in are not waiting for clarity. They're creating clarity with their employees, with their clients, with their prospects. That's where it is. No one knows where this is all going to go, when this uncertainty is going to lift. Our point is, don't wait for that.
Yeah. Now, I dug into the concerns in the report, and moving down a little bit down the list from the top two were companies seeing resistance to price increases, which I think in the age of tariffs, if they really come in strongly, are going to be inevitable, and rising labor costs. So how do you view those aspects changing under a tariff?
They're both going to be, let me put it simply, they're going to get worse. A tariff is a tax. So the tariff is already increasing operating costs. And many of the wide format printers and participants in general across our industry are also very concerned about how restrictive immigration policies will affect the supply of labor, and so the cost of labor. And what's interesting, Dan, is in the survey, we asked about how companies are responding to these rising costs, and basically whether costs are rising because of a tariff or some kind of restriction on labor supply. You have three options: raise prices to offset some of the increase in costs, increase productivity to offset the increase in costs, absorb some of it to maintain market share, or some combination of the three. And that's what's important to me. So on the survey, I asked participants, how do you see this playing out for your company? And the first line of defense is raising prices. Practically every wide format printer who participated, 97.8%, do plan to raise prices in response to the increase in tariffs. 61% plan to offset some of the increase by boosting productivity. And more than half, and this surprised me a bit, 56.5%, do plan to absorb some of the increase to maintain market share. Now, specifics vary significantly from company to company, but on average, the wide format printers in our survey expect to offset 65% of the increase in tariffs by raising prices, 15% by increasing productivity, and they plan to absorb 20% of it. And the only remark I'll make there is I'd really like to see the percent they plan to offset by increasing productivity a lot higher. And for some companies, it is.
Yes.
Some of the wide format printers we surveyed, 75, 85, 95, 100% of the increase they plan to offset by raising productivity company-wide. But on average, I thought that number was disappointing, 15.2%.
Now, absorbing some of those costs, isn't that kind of a temporary fix? That's a lot.
Yeah, that is a temporary fix. How far can you go with that in a margin where, again, margins are already under pressure, margins are thin, and I could see why some want to do that because they don't want to lose market share. Maybe they feel that if they try to pass this on to customers, even if they prepare them for it, they're going to possibly jeopardize an important client. But to your point, and I can see that, but to your point, you got to realize that's temporary. Whereas if you boost productivity, you're in a lot better position. Or even if you, again, prepare clients for a price increase, you're in a lot better position. But absorbing it is definitely not the long-term answer.
Yeah. And I guess another thing that comes to mind for me is this not a good time to have the discussion about raising costs? Nobody is in the dark about this going on. It's not like a arbitrary price increase.
Right.
To tell the customer, my expenses for materials are going up 30%. I've got to do this. Would they be more understanding?
Yeah. And again, I'd go back to your reference to COVID. That's exactly what happened during COVID, the supply chain disruptions caused by COVID. That is what worked, going to your customers early. And again, I can't say it any better than you just said it. Preparing them. My costs have gone up. My materials have gone up. My labor is going up.
Yeah.
I've got to pass some of that along. And as during COVID, folks know what's happening. So that also is a far better approach than just saying, I'm going to absorb a lot of this.
Sure. I think one absorption angle maybe is you absorb temporarily as you slowly raise prices and bring it so it's not such a shock. But sometimes you have to rip off the Band-Aid, right?
Yeah, exactly.
Let's talk about the priorities that the PSPs in this wide format survey talked about.
Mm-hmm.
The top ones for them were increasing productivity, but this is from a different angle. And I would assume increasing productivity is not just in print production, but they also want to strengthen their core services. So what can you tell about that?
The number one priority by a wide margin, understandably, and this was before all this disruption, confusion, and inflation caused by the tariffs. Coming into 2025, the number one priority by far was increasing productivity by moving ahead with capital investments, despite the uncertain, less than favorable economic environment, automating, streamlining. And I thought this was interesting, making every process from estimating to invoicing even a little more efficient. What the wide format printers we surveyed talked about is what I summarize as drawing on the power of consistent gains on the margin. What does that mean? It means you pick a process, you figure out how you can make that process even a little more efficient, and then you repeat for another process. For any single process, the gains are likely to be limited, but cumulatively, they can be game changers. And then also here, and I was very pleased to see, how many of the wide format printers who participated in our research are embracing artificial intelligence, are learning about it, are recognizing its potential, and how AI can boost productivity by automating time-consuming, low-value-added tasks that we could never automate before. And in terms of strengthening core services, that's what I describe as a timeless business fundamental. And what happens is, in our excitement about diversification, I've seen it happen a lot. Companies lose sight of those core services that are the foundation of their value proposition. So absolutely explore diversification, but don't let diversification be a distraction that undermines your focus on your core fundamental services.
A couple other priorities I noticed were the quest to add higher value, more profitable services, and also to achieve better execution of work done. So while those are separate categories, do you see them as being in some way related to each other?
Yes, I see them related in this way. They are both timeless business fundamentals that we can easily lose sight of during periods of great uncertainty and technological disruption. And it was interesting, Dan, when we do these surveys, we ask people to justify and explain their responses. So I know what's behind a number. I know what's behind a response. And when I asked the participants, the wide format providers, what they want to do in 2025 to really strengthen their long-term competitive advantage, you know, it was interesting, Dan. They didn't talk about some secret sauce.
Okay.
They talked about, again, what I call timeless business fundamentals. We talked about one earlier, strengthening core services. Two more they talked about are adding higher value, more profitable clients and work. Very simply, finding out where we're making money and focusing there. And many wide format providers we talked about spoke very frankly about firing clients and being very selective for whom they will print. And then execution. You can't find a more timeless business fundamental than execution. And that simply refers to doing what we most need to do. And as Dan, shoddy execution can undermine even the most well thought out and conceived business plans and practices. And the participants in our research, our wide format panel, they talked about effective execution a lot and the importance of it, to the point where they actually outlined 5 critical steps. Number 1 being defining 3 or 4 absolute priorities and how progress toward those priorities will be measured. Developing contingency plan for each priority as we move through and find out that we're maybe off course here. So what kind of correction are we going to make? Absolutely communicating the vital few to all employees so they understand their importance and we create commitment to the vital few. Monitoring progress toward the priorities. Where are we and why? How are we going to correct if we're off target? How are we going to build on strengths where we are on target? And then adjusting quickly as results come in. And again, that's the kind of thing when I asked about what companies are going to do better in 2025 than they did in 2024.
Yeah.
How they're going to strengthen their competitive advantage. Again, not some secret sauce. That's the kind of thing they talked about, those timeless business fundamentals.
I think one thing that popped out of those 2 categories that we just talked about, the higher value services and better execution, I don't think companies that are incapable of good execution are not going to access those higher value services. They are harder, they're higher touch. We have companies that are getting more deeply into fabrication, into experiential graphics. That requires a lot of logistical planning, a lot of knowledge of materials and tools and everything else, which multiplies the difficulty of execution. You're not just making a final banner. To me, those things go hand in hand.
Yeah, great point. Absolutely.
Now, among the priorities that were listed in the survey report, and there were quite a few, there were some that ranked on the lower end in terms of being priorities. But when you look at that list, when you look at the bottom of that list, are there any that pop out at you where you think, you know what, this should be a priority for them?
Yes. And I would just preface my remarks with, I understand why these were relatively low ranking, because right now, wide format printers have other priorities. They've got to improve productivity company-wide. They've got to execute it effectively, strengthen core services, all the things that we talked about. And again, you have to define priorities. If everything's a priority, nothing is a priority. But when I look further down the list, to your point, I see a couple of things that I think we really do want to focus on. And one is this whole area of cyber security and data security that are now essential to protecting against the rapidly growing threats of ransomware, malware, identity theft, data breaches. As we get more and more into handling clients' databases, this is the type of thing we really have to make a priority. And then the other one, 2 more really, one of them being risk management, COVID, what's happening right now. It shows you how rapidly conditions can change and why risk management is so important. And here again, if I may, I'm going to quote one of our wide format providers because they say it so eloquently. Why risk management should be a priority is simply, and I quote, no matter how well your business is doing or how well it is run, it can turn in an instant. And again, we're seeing that right now, where all kinds of things that we really would never have thought a year ago would be affecting us are affecting us profoundly. And the only other one I'd add, Dan, and this was a little higher on the list, was being data-driven. That is, drawing on superior knowledge of what's happening inside and outside to make superior decisions company-wide, to analyze customer behavior and preferences, market conditions, supply chain conditions more effectively. And I'll just add here that artificial intelligence applications help us do that. They allow us to do analysis far deeper, far more insightful than we ever could with conventional analytic tools alone. So those are the kind of things I think going forward we should pay more attention to.
One of the things you highlighted in the survey report was the focusing on focus, culture, and commitment as outlined in the report. So what does that mean for wide format PSPs, and how does it contribute to what companies say are their biggest priorities?
There again, I like follow-up questions. I asked the participants, what are your priorities in 2025? What do you most want to accomplish? They answered that, and we talked about the answer. I followed up with, how are you going to achieve those priorities? Because having a goal, having a priority is one thing. Realizing that goal, achieving that priority is something very different. And again, now, obviously, responses differed across our very diverse panel. We have wide format providers in here that have $1 million in sales a year and $200 million in sales. They're in very different positions. Responses vary depending on a company's specific resources, circumstances, and priorities. But across our sample, participants talked about three things. They talked about focus. And all that meant is keeping, and I'm quoting, keeping our attention on projects that are most important to us and not getting distracted by other shiny objects that pop up along the way. And I'm quoting, identifying our true top three priorities and focusing until they are achieved. They talked about company culture. They talked about a culture that is focused, intentional, and accepts change, that sustains commitment to our priorities by painting the vision, communicating why, and mentoring along the way. A culture that holds everyone accountable and that continues to educate employees on the value of never-ending improvement and encourages employees to keep learning. Not my words, not Printing United Alliance's words, the words of wide format leaders who participated in our research. And then commitment. Here they spoke very frankly about their role in all this, providing the leadership, the talent, the resources necessary to achieve the priorities. They recognize that all of this has to start with me.
Yeah.
Folks have, everybody on staff has to see my commitment to these priorities and how we're going to achieve them.
I'd like to jump back. You talked about AI a little bit, and there's a lot of interest in AI and in automation across the printing industry. It helps us do more. It also helps us do less. So what do you think is most driving wide format producers toward AI? And what are the side benefits of those?
2 years ago, it wasn't even on the radar. Now it is very significant. In fact, when we asked wide format providers which capital investment they would most like to make in 2025, which capital investment they believe would most benefit their companies, artificial intelligence, believe it or not, artificial intelligence was cited most frequently, followed by e-commerce, digital infrastructure, and workflow software. But again, I could show you those data from 2 years ago. AI wouldn't have even been on the list, never mind number one. And what's happening is companies across our industry are beginning to recognize that AI can improve every mission-critical process, not just in operations, certainly in operations with preventive maintenance and quality control, but also in human resources, in marketing, in finance, in market analysis, client analysis, and forecasting, and in the kind of things we talked about just a minute ago, cybersecurity, data security, risk management. They're recognizing the power of AI, and they're recognizing that it can boost productivity company-wide, not just in operations, company-wide, by allowing us to automate low-value, time-consuming tasks we could never automate before. The value is every hour we free by automating some time-consuming, low-value task, we can now reallocate to an activity that creates value for our clients and our employees and our customers. We're recognizing how powerful and revolutionary it is, and that's where we need to be.
Just a quick question. As you were talking, I had this realization that in the past several years, we've had COVID. We have the economic uncertainty of today, which is as you called it, like a reordering of the economic structure. But we also had the rise of AI, and all of those things have this sort of whiplash effect. Right. Is that, in your opinion, is this unique to our time, or has business always involved these whiplash things and we just tend to focus on the present?
I think these kind of market disruptions and upheavals are just part of the world. People develop new technologies, revolutionary new technologies, that causes a disruption. Things like COVID come around, recessions, deep recessions come around, things that really all new ways to produce products, consumer preferences change. These things are part of the realities of business, that as long as we're going to have advances in knowledge and technology and find new ways to do things, that's going to cause a disruption. Change, whenever something changed dramatically, some people win and some people lose. Significant change is always happening. We don't know where it's going to come from. It might be biological, it might be economic, it might be technological, it might even be political, like all of this stuff. But wherever it comes from, we need to be aware of it, digest it, and figure out, again, how we're going to make it an opportunity rather than a threat. Because someone will, as I mentioned earlier, whatever the source of the disruption, somebody figures out how to make it an opportunity.
So the last question I have, and in the survey report, you talk about, you call it the key question, which asked participants whether there was anything else they'd like to say about 2025 as they saw it coming. So how have those expectations for the year panned out? And do you feel like wide format producers are operating on a whole new playing field, or is it just different?
The folks that we surveyed did a remarkable job anticipating what 2025 was going to look like. Again, as we said earlier in our discussion, they knew the economy was slowing. They knew cost inflation was going to continue to be a problem. And they were aware that something was going to happen with tariffs. They didn't know exactly what, no one did, but they were aware. Their environmental scan was very sharp. And they knew that this increase in their costs was going to be an issue. It was going to slow the economy further. It was going to raise their costs further, might push interest rates up higher. The environment was going to be even tougher this year than it was last year. They recognized that the uncertainty created by the tariff policy, again, this on again, off again, nobody knows what tomorrow's going to bring policy, was going to be a drag on the American economy. It was likely to spur inflation, and it was likely to squeeze their profit margins further.
You've been listening to the Wide Format Impressions broadcast. You can find more great content at wideformatimpressions.com.